All right, let's talk about something that's probably been on your mind because it is just confusing. On the one hand, you hear about this booming stock market, incredible AI breakthroughs. And then on the other, you're seeing headlines about a slowing economy and massive layoffs. It just doesn't add up, right? It's a real mystery.
So let's start with the good news. The really good news. The S&P 500, which is, a huge benchmark for the stock market, is up a massive 21% so far this year. It's hitting all-time highs. And this incredible growth, it's almost all being driven by this absolute inferno of investment in artificial intelligence, which has just exploded into the hundreds of billions. From the outside, things look amazing.
But here's where it gets weird. While the stock market is flying high, the actual real-world global economy is, hitting the brakes. Global GDP growth is expected to slow down to just 2.9%. That's the slowest it's been in years, and it's a huge warning sign that something just isn't right under the surface.
And then you see the headlines, right? Widespread, massive layoffs at some of the biggest companies in the world. And it's not just one sector. We're talking logistics, tech, food, cars, you name it. It's a completely contradictory economic picture.
So what in the world is actually going on here? Are we living through a genuine tech revolution, or are we just stuck inside a giant AI-powered bubble that's about to burst? Okay, let's really get into it.
First things first, before we can figure out if we're in a bubble, we have to agree on what a bubble actually is. So let's break that down.
Put simply, a bubble is when the price of something, say a stock, gets way ahead of what it's actually worth. It's all fueled by hype, by pure excitement, by this feeling that the price can only go up. Until it can't. And then everything comes crashing down.
And for a lot of us, this isn't our first rodeo. We've seen this movie before, right? We saw it with the dot-com bust back in 2000, the huge housing crisis in 2008, and even that more recent tech correction a couple years back. Each one was a little different, but they all followed that same painful pattern.
Okay, with that in mind, let's put on our prosecutor hats. Let's look at all the evidence that says, yes, absolutely, we are in a classic overheated AI bubble right now.
Just take a look at this. This chart shows you everything you need to know about how concentrated this boom is. The AI chip company NVIDIA is up a mind-blowing 115% this year alone. It's completely dwarfing everything else. In fact, it's so extreme that if you took just a handful of these top tech companies out of the S&P 500, the rest of the market would actually be in a recession. All the growth is coming from one tiny corner.
And the sheer scale here is just staggering. I mean, we're not just talking about big companies. We're talking about single companies that are now bigger than the economies of entire developed countries. Look at NVIDIA. Its market value is larger than the economies of Germany, Japan, India, and the UK combined. It's a concentration of economic power we've literally never seen before.
So this brings us to what's famously known as the Warren Buffett indicator. It's basically a gut check. You compare the total value of the stock market to the country's entire economic output. You want it to be around 100%. Right now, it's at 217%. The market is valued at more than double the entire U.S. economy. And the last time we saw a number this high was at the absolute peak of the dot-com bubble, right before it all fell apart.
But this might be the biggest red flag of all. It comes from the people who know these companies best, the insiders, the executives. Right now, for every one insider who is buying their own company's AI stock, there are over 4,200 of them selling. Think about that. The people on the inside are cashing out at an incredible rate.
Okay, so that seems pretty convincing, right? Case closed. But hold on, it's not nearly that simple. Let's flip the script and look at the case against this being a classic bubble. This is where the story gets really interesting. So while prices are definitely high today, they are nowhere near as crazy as they were during the dot-com era. A good way to measure this is the price-to-earnings ratio. Basically, how many dollars are you willing to pay for $1 of a company's profit? Back in 2000, that number was a wild 60. Today, it's about half that, around 30. So yeah, it's expensive, but it's not the same level of pure speculative fever.
And here is probably the most important point of all. Today's AI giants are actually making money, a lot of money. Remember the dot-com bubble? It was built on companies with cool domain names but zero profits, just burning through cash. The companies at the center of this AI boom, they have real products, real customers, and they are pulling in billions in actual revenue. There's a real profitable engine here, not just hype.
And there are a few other really strong arguments here. For one, all those layoffs, a lot of that is just companies correcting after they went on a wild hiring spree during the pandemic. Second, unlike a lot of past tech fads, generative AI feels like a genuinely game-changing technology. And maybe most important, we are still so early. Only about 10% of businesses have really adopted AI, which means the room for actual, real growth is just immense.
So we've got two convincing, but completely opposite cases. What gives? If it's not a simple bubble that's just going to pop, then what exactly is this thing we're living through? Well, here's the final take.
The verdict is, yes, we are in an investment bubble. The prices are definitely ahead of the reality. But, and this is the key part, it's not a bubble that's going to pop in the way we usually think of one.
See, instead of a sudden crash, what we're actually seeing is a historic reorganization of power in the tech world. Sure, a lot of the smaller AI startups are going to fail, but the giants at the center of this, your NVIDIAs, your Microsofts, they've become so woven into the fabric of the global financial system that they're basically too big to fail. A collapse for them would risk taking the whole system down. So this isn't a pop, it's a high-stakes power struggle that's going to decide who rules the next era of technology.
And that really leaves us with a final, really important thought. Maybe we've been asking the wrong question the whole time. Maybe the question isn't if this is a bubble about to pop, but rather who's going to win and who's going to lose in this massive reshuffling that is already changing our world. Thanks for watching.